For more on the CBN's MPC meeting, I'm now being joined on the news at 10 by the CEO, Financial Derivatives Company, Mr. Bismarck Rewane. Mr. Rewane, good to have you. Good to have you with us on the news at 10, indeed. Yes, so the latest one, of course, the CBN MPC raising rates to 27.5%. But let's even look at the general outlook. 8 meetings in the last 20 months, yes. I believe. CBN, MPC raising rates to 6 times, yeah?
Yeah, 6 times.
6 times, and of course they've maintained status quo twice. All right, so Mr. Rewane, is this a ritual or are we going through emotions? Let's start with that.
Let's understand something. Raising rates is contracting what we call a tightening cycle. Keeping rates...
Interest rates?
Yes, raising interest rates.
Raising interest rates,
is actually tightening the monetary policy. But what has happened is that no surprises, it was widely expected. So maintaining the status quo is part of easing, because you can ease by bringing down interest rates, you can ease by maintaining the status quo, but also that is a move in the right direction. So there were no surprises expected. The Central Bank Governor was very clear, and the Monetary Policy Committee was very clear that the target is stability. Stability in prices, stability in monetary conditions, and stability in the currency. Those were the main issues that were raised today. And as expected, the markets loved it. And that's what we see.
So what do you think has prompted this decision by the CBN to maintain status quo?
Well, first and foremost, like you said, 6 times hike, twice status quo, no reduction. Cumulative interest rate so far has been 8.75. That's the interest rate hikes in the last 20 months. But inflation has actually come down, mildly. It's all about inflation. And essentially, 3 things were driving this: the exogenous environment, that is outside of Nigeria. In Nigeria, there's been moderation in inflation, the basket was reconstituted, and the base year was changed to 2024. The global uncertainty was exaggerated, and the probability of a recession was heightened, but generally speaking, that has been discounted somewhat. Finally, the exchange rate, the Naira in the exchange rate market has been relatively stable. In other words, it had ranged from 1560, 1590, all the way to about 1630. So, based on this, the central bank decided, and wisely so, to maintain a wait-and-see attitude. This is what I was talking about: inflation moderating, uncertainty reduced, and narrowing the exchange rate. So they took a wait-and-see approach. It's been 90 days since the last meeting. So for the next 60 days, what are we going to see? The last 90 days, there's been what we call the swinging pendulum. In all of this, we had 5 variables we were watching. 2 were in green and 3 were in red. The inflation basket went from 24.48 to 23.71. The exchange rate went from 16.15 to 16.23, mild. And the gross external reserves, $39.72 billion, down marginally to 38.3. And the net external reserves actually went up from about $34 billion to about $21 billion. Money supply growth, which is a major issue, went from 17.3 to 24. Don't forget, in the past it had gone as high as 80 and 90%. PMS petrol went from 925 to 890, that's the country price. So that's one of the things that we looked at. Now, so next you will see that there was a change in the weights. In the new basket, in the previous basket, we're using 51.8% of our income on food. Now it has been brought down to 40. In other words, if you earn 100,000, you are spending 52,000 naira on food, and now they expect you to spend only 40,000 on food. Clothing and footwear, you are spending 7,700 on footwear. Now you're spending 5% down. Housing, water, electricity, 16.7 to 18.2. Where has it gone? Health, you've doubled your spending on health from 3% to 6%. On transport, from 6.5% to 10.7%. Restaurants and hotels, from 1.2 to 12.9. I do not agree that Nigerians are spending less on food at home and more on food in the restaurants. So, but that's something. They say it's now more about yam and cloth and more about fees and data. Now, Now, this is the key issue. The central bank was very careful in not going ahead of itself because we have no control over the price of oil. In this scenario-based analysis, we're saying that if the price of oil falls below $50 a barrel, then the naira will weaken to 1,900 a dollar. If the price stays between 50 and 60 or above 60, your fiscal deficit will be about 5% of GDP, and the naira will weaken to about 1,700 to 1,800. We can live with that. But if it goes higher than $75, status quo will remain. So these are the three scenarios. And since they are not under our control, we just have to wait and see. Next, and very important, is that today, the true value of the naira, the PPP value of the naira is 1,166.
1,166
per dollar. But if you add the 25%, what we call the illicit or frontier market premium, it will give you 14.12, right?
That's 1,412.
1,412. That is because if inflation stays at this level and the price of oil increases, and then we increase our spending fiscal deficit, we will go from 1,166 to 1,412. And that's fair. Nigerians can live with that. Right now, we are buying it at 1630, 1640. It's not a problem. So I think that's important. Exchange rate stability is the main issue. Is it the exchange rate weakness that causes inflation, or is it inflation that causes exchange rate weakness? We don't know. So let's go. What to expect next? This is what has happened to the exchange rate. You can see that it has been stable all along from January 23 to all the way about here. So at certain points, but generally speaking, Nigerians are satisfied, or at least appear to be satisfied with the exchange rate movement right now. And that's what kudos to the central bank. And finally, as you go in, let's look at what's happening to ourselves and Ghana.
And Ghana, yes.
Yeah, in Ghana, December 2022, Ghanaian inflation was 54.1%. In the last 2 years, it has come down to 21.2. They've had a change of government, they've had a change of policy, they've had all sorts of problems. They had the IMF program, and guess what? The Ghanaian cedi is the best performing currency today over the last 8 months, right where inflation has come back. Nigeria, we had 21.34 in December 2022. Now we are 23.17, but we changed the basket. And now, policy rate was 16.5 in December 20, and now it's 27.5. So we've contracted. We're going along the same route. So we're doing some things right compared to our peers. Now, this is the food inflation basket. In January, if you look at these 5 variables, right, you'll find that one was amber, beef stayed at 7,200, and you see wheat flour has gone down. This is between January 25 and May 25. So generally speaking, yams have gone from 12,000 to 10,500, beans has gone from 100,000 to 80,000, and rice has come down to 82,000 because there's this rumor that there's poisonous rice and all of that. But that will go back up. Garri is at 35,000 to 37,000, and tomatoes are up from by 100% to 70,000.
So it does appear we're making a bit of progress
between January 20. But if you go back to January 2024 to May 2025, that's where the problem is. You'll see that in the next slide. Now this is it. In January 2024, 16 months ago or 18 months ago, yams were 9,000, it's now 10,500. Eggs were 3,800, it's now 5,500. You think you're doing well, but compared to January 2024, you're not doing well at all. Beef was 3,500 at that time, and it's now 7,200. Beans, 68,000, it's now 80,000. Look at rice was 70,000, it's now 82,000 naira. Garri was 25,000, it's up 37,000. Generally speaking, wheat prices have gone up by 42%. So what are you going to believe? The inflation number that says your inflation is up 24%, or the reality that between last year, January, and now, prices have gone up by 42%.
So it doesn't look as if we're really feeling
the
effect
right? We are running faster in order to stand still. That's what we call it in economics. Now, value of transaction, but in all of this, people are spending more money. We have spent over 111 trillion in May alone. That's people spending velocity of circulation of money. Increased usage of POS, value of transactions up, and projected rise further in May after the Edo Kabir and all of that, May and June. Now, finally, there are 3 categories of Nigerians. There are survivors, which includes you. For you, food prices may go down a little bit, but transport fares stay flat. Your house rent is likely to go up, and your electricity bill is going to go up because you're in band A or what have you. Right? For corporates, utility bills are up, diesel price will be down, thanks to Dangote, our white knight. Borrowing costs are down, and salaries will stay flat. But for the elites, the rich, airline tickets up, international school fees up, luxury goods flat, right? Like they say, the more you look, the less you see.
So where does this leave us, really? I mean, the outlook.
Okay, so what's going to happen between now and July? One, GDP is going to grow. The numbers are coming out very soon to be 3.46, which is good, better than what they call population growth rate. The president will make a speech on May 29 or maybe June 12, I don't know, but it's going to upbeat speech saying that things are going to get better, promising that things are going to get better. Food prices likely rise due to planting season effects. We know that. Naira will be stable, trading between 1620 and 1650. The stock market will increase because companies are now beginning to make money on a quarterly basis, and instead of foreign exchange losses have passed. Transaction volumes are anticipated to grow, and there'll be an increase in pension assets. So basically, you are going to be slightly better than you were in May by July this year.
Well,
thank you very much.
We'll definitely leave it at that. Mr. Bismarck Rewane, thank you so much for your thoughts and analysis on the News at 10.
Thank you for having me.